Let's talk about the Nairobi Securities Exchange and what has been happening for the last 6 months since January 2026 to June 2026. Because I think it is important that we know the performance of the all-share index compared to other stock exchanges or securities exchanges around the world. How has the Nairobi Stock Exchange performed? Now, HISA performed an analysis and found out that the Nairobi Securities Exchange was number 4 in the world. Number 4 in the world in terms of how it has performed for the last 6 months. So, if somebody invested, for example, 1,000,000 shillings in January, how much would they have gained or lost by June, end of June 2026? And out of this research that was done, it was found out that Nairobi Stock Exchange, if you had invested 1,000,000 in the Nairobi Stock Exchange, Securities Exchange, I keep referring it to the previous, how it used to be referred previously, but I'm talking about the Securities Exchange. Well, the same thing. Nairobi Securities Exchange, the NSE all-share index, performed 4th best in the world. This is after Greece, which was number 3. I think I should actually mention the percentage by which Nairobi Stock Exchange all-share index measured with. So there was a positive 26.77%. So it gained 26.77%. And then number 3 was Greece, which had gained 34.33. And then number 2 was Poland, which gained 35.09. And number 1 was Ghana, which gained 40.75. Now, if you look at that particular list, you will see that they are in the top 5. In the top 5, I need to give you the number 5. Number 5 was Germany with 20.09. And then number 6 was Italy with 16.37. And Spain was number 7 at 16.15. But if you look at all this list, the list that I've just indicated or talked about, there is an interesting thing. It's the emerging markets that are performing way better in terms of the returns to the investors. So smart investors are getting to realize that they need to probably look at the emerging markets, what we call developing countries. Look out, Ghana was number 1. It had the highest returns, 40.75, and you're talking about the all-share index, not the smaller ones, like the 20-share index or the 10-share index like that. No, we're talking about the all-share index. So the market generally performed way better in Kenya. And I was talking about Ghana, sorry. In Ghana with 40.75. As in, if you invested in Ghana, in the all-share index in Ghana, then your return on investment would be 40.75. Make that make sense to many investors. And I want you to compare this with what happened with the rest of the Western world. Let me give you an example. NASDAQ Composite. NASDAQ Composite is the US, like all share equivalent of the Nairobi Securities Exchange all shares. It gave back between the 6 months, between January and June this year, there was a positive return of 8.47%. That is NASDAQ. In the United Kingdom, the FTSE FTSE 100 share index returned 2.76%, while in Japan, the Nikkei NASI 225, that's a total 225 companies that are listed in Japan, they give a return of 1.49% for the same period that we are talking about. So you can see the returns that would have expected to have if we had invested in the Nairobi Stock Shares Index, Nairobi Securities Exchange or Share Index, if you had invested in that, then we would say that you would have gotten about 260,000 Kenya shillings if you had invested a million at the beginning of the year. That is incredible returns. That is good returns. And it is important to find out, so really, what brought out these good returns? And I'm going to highlight a few here. And number one is the stability in the banking sector. Because banking sector in Kenya remains the cornerstone of the Nairobi Securities Exchange. Why? Equity Group, for example, KCB, Cooperative Bank, NCBA, ABSA, Standard Chartered, they all performed exceptionally well in terms of profit. So they had higher profitability, they had lower provisioning of the loans and all that, and they had healthy dividend expectations. So like almost all of them gave out dividends. Some of them, of course, small, others gave very high. And there was stable interest margins. So CBK played a good role there in making sure that the CBR rate remained relatively stable for those 6 months. So, and these shares for the belonging to the banks represent a very large portion of the Nairobi Securities Exchange. Old habits die hard. So I knew it as Nairobi Stock Exchange. Changing my mind to Nairobi Securities Exchange is taking a bit of time in the tongue. So I need to say it over and over and over and over again. Then number two was that Safaricom recovered. Safaricom remains the largest listed company at the NSE. And its share prices had struggled for a period of time. But in 2026, it has stabilized and recovered very strongly. So people are starting to see the improvement of the share prices of the Safaricom. And because of the sheer size of the number of shares that are being traded for Safaricom, of course, this gave the NSE a very big boost. And a lot of people are keen on Safaricom. And this is the reason why Safaricom has expanded to Ethiopia. So through M-Pesa. So it is expanded to Ethiopia. And if you go to Tanzania, you still get M-Pesa. If you go to Uganda, Rwanda, you still get M-Pesa. So it's a big market for them. And should they move to DRC, then Safaricom will become the biggest company in Africa. But that's aside. So there was that recovery of the shares for Safaricom. They recovered really well. And then there was, of course, the stable Kenya shilling. If you notice that the whole of the 6 months, actually including this month of July, the Kenya shilling versus the dollar has not changed from 129. It has remained very constant. Where there have been fluctuations is the pound and the euro and probably the yen and all that. But for the dollar, which is like the global standard, which a shilling or a currency is measured against, has been very stable. CBK has done a brilliant job making sure that we have enough reserves for the dollar and that the foreign exchange remains very constant. So the Kenya shilling has been has been very stable. And that means that there's a lot of confidence with the foreign investors. Other places, there was a lot of fluctuations, Nigeria and all that. Kenya remained, it's a very good thing. Of course, then there was the attractive valuations. So Kenya shares had become relatively cheap after several difficult years. So many companies were trading below historical valuation multiples. And therefore, international investors have consistently viewed Kenya as undervalued the whole of this year so far. And hence the reason why you start seeing a lot of them coming in to buy in shares. And of course, number 5 is the high dividends that the companies have been giving. And for example, the KCB, Equity, Stanbic, Standard Chartered also gave very good dividends. KPLC, not KPC, but KPLC, and the agricultural sector as well has been giving good dividends. So those yields of between 6 to 12% were available on some counters, which is a very good return. And finally, let me finish by, those are 5 reasons, by the way, but I want to finish by saying that, asking the question, did Kenya really outperform Wall Street? Yes. So total market size, liquidity, technology, and trading volume, if you compare all those, then the Kenyan market did outperform the Wall Street. As we talked about NASDAQ, FTSE, Shanghai, Nikkei, and all that, they did outperform Wall Street. So it begs the question then, what is the market capitalization? The Nairobi Securities Exchange is around, has a market capitalization of about 3.7 trillion Kenya shillings, which is about 30 billion USD. Billion? Yeah. And if you compare that with NASDAQ, which is about 25 trillion US dollars, and New York Stock Exchange, which is about 30 trillion US dollars, the difference is massive. But I want to say this, if you look at these differences, you should not be afraid to invest in the Nairobi Stock Exchange because of these differences. Because what you are interested in is the percentage return that you get on your investment. So it doesn't matter that the New York Stock Exchange has a valuation, market capitalization of 30 trillion US dollars. And Kenya has only 3.7 trillion Kenya shillings, or 30 billion US dollars. It doesn't matter. It is where the money multiplies for you, and that is where you should go. So this is a very good performance by Nairobi Stock Exchange. And when I think about it, then I think that it is time for the emerging markets to take over the world. And they will. Because now we have the knowledge, we have the expertise, we have the market, and we have the population to do these things. So do not be afraid to invest in the Nairobi Stock Exchange. It will give back. It will certainly give back. You just have to be very wise. You just have to consult with your probably your brokers or the person that deals with your investments, experts, just to find out what to do. So be on the lookout and know what's happening, because shares can give back, can make you rich, but they can also make you poor if you do the wrong investments. If you have not subscribed to this channel, please go ahead and click that subscription button right there. You can like this video and then share it with your friends. Let's grow this channel to something bigger. Adios.